being an efficient, affordable, accessible transportation system. Such a system is needed to transport people and goods who will be involved in the development of trade, tourism, investment in the continent. When we talk of transportation system, we have surface transport, sea transport, air transport. Surface transport in Africa is not well developed. The continent is a big landmass. It doesn't have fast train network. It doesn't have highways like what we see in the United States. It needs a lot of investment and time before we realize the African Union flagship project of implementing a fast train network in Africa. Sea freight is possible, but it is good only for goods, but not for passengers because of speed issue. And many African countries are landlocked, and we need to develop the surface transport to complement the sea transport. But I would like to take the time to focus more on air transport. Air transport is the safest, fastest, and more convenient means of transport for Africans within Africa. I believe most of us who came from outside Ghana to attend this meeting have used air service. This shows how much air transport is important for African socio-economic development. Unfortunately, air transport in Africa is still much under development. To put it in perspective, in 2022, globally 3.6 billion people took air transport. That is about 45% of the global population. In Africa, only 129 million people used air transport, which is about 9% of the African population. So this indicates that our use of air transport in Africa is about 1/5 of the global average. And it confirms that we are at the lowest level. If we believe air transport is an important vehicle to bring African prosperity, to advance our ambition for African continental free trade area creation, then we have to identify the issues, the challenges of developing air transport in Africa. Ethiopian Airlines has been providing this service in Africa for the last 7 decades. And today it is flying to 63 destinations in Africa, providing the best connectivity for intra-Africa air transport service. But like smaller airlines in Africa, Ethiopian Airlines has a lot of challenges, which is shared among African airline industry. The first one, traffic right. Many African countries are still restricting permit to fly into those countries and inhibiting the free movement of people and goods. This is affecting the development of African airlines, both big and small. The reason behind is often given as protection of the smaller national carriers from being overwhelmed by the bigger airlines. This is incorrect belief. I know several smaller airlines who started operation died because of traffic right limitation into their neighboring countries. I know that several African countries are not happy for African airlines to fly to them, whereas they open up to non-African airlines. We have to correct this if we want the indigenous African airlines to develop. Secondly, tax. In Africa, many countries believe that air transport is good for the rich and it has to be heavily taxed. I can give an example. The airfare between Lome and Accra, 50% of it goes to government and other taxes. This has made air transport expensive to use in Africa compared to the rest of the world. It is understood that African governments want to generate revenue and are taxing the airlines, but the tax should be reasonable. Ethiopian Airlines flies to 131 destinations throughout the world, and among them 63 are in Africa. We don't have tax issues in the US, we don't have tax issues in Europe, no problem in Middle East and Asia. We have problems of tax only in Africa. Why? I think governments have to benchmark about the tax system on airlines that they are levying on the indigenous airlines. This is dwarfing the indigenous African airlines by making the fare very expensive, non-affordable to Africans, but at the same time, a different regime of tax is applied on airlines in Africa. And I would like to be honest with you that the sales offices of many smaller African airlines are often closed due to unreasonable tax, which is not asked anywhere else. We have to correct this if we want African airlines to develop and contribute to our ambition of creating African development. The third one is infrastructure. For air transport to be safe, efficient, we need to have enough airports. We have to build enough airports, but at the same time, we have to upgrade the facilities of existing airports. At several airports in Africa, it is common for us to see that the security screening X-ray machine is broken and the flight is delayed by 1 hour. We don't have parking space, so the flights have to queue. We don't have enough cargo warehouse to transport cargo between stations in Africa. There are a number of infrastructure issues that we need to address. Then Africa has 54 countries. Every country wants to have its own national flag carrier. It's not possible to have 54 successful airlines in Africa. It is a fragmented industry. It needs consolidation. It needs cooperation among airlines to create a very strong regional airlines that connect the communities in every region of the African continent. A good example is ASKY. I believe several of you are from West and Central Africa. ASKY is a cooperative airline established in Lome, Togo, and it is connecting more than 24 cities today in West and Central Africa, providing a daily connection among the West African people, which was impossible to fly from one West African city to another before ASCAI was established. We remember that many people had to go to Europe and come back to travel between two West African cities. And it is a joint venture, a cooperation, non-government airline, and it has become a very successful airline. Cooperation, consolidation is needed in Africa, African air transport, and we need the support of African governments to facilitate this. The other problem we have is governance and leadership. We have several smaller airlines in Africa, most of them government-owned, but still they are struggling. We have to ask why. Number one, there is lack of leadership in these airlines. A strong leadership with knowledgeable professionals is very critical to make African airlines to be successful, to stand by their own, and to grow, supporting the African Prosperity Initiative. The second point in connection with this is that there is a lot of interference from the owners. If airlines have to be successful, grow and support the African Development Initiative, they have to be managed without any interference. They have to be independent from external interference. Otherwise, you will see them struggling all the time, and the government is pouring money into those airlines. They have to be managed as a commercial business airline. The last point is financing. Airlines need financial support from governments and other financial institutions to acquire aircraft to develop their internal capacity. Once again, I would like to emphasize that air transport is an important component of implementing African continental free trade area to transport people economically, efficiently, people and goods, and we need to understand this requirement and support the development of African air transport industry. I thank you very much for your attention.
Thank you very much, Mesfin Tasu, Group Chief Executive Officer of the Ethiopian Airlines. And now please welcome, talking about finance, technology, innovation in the context of intra-Africa trade, please welcome the Honorable Minister of Trade, the Honorable Minister of Finance, Ken Ofori-Atta. Ladies and gentlemen, he's coming to talk one more time about finance, technology, innovation in the context of intra-Africa trade, the Honorable Minister of Finance in the person of Ken Ofori-Atta. Please do welcome him with a resounding round of applause.
Thank you very much indeed. I was indeed for 72 hours a caretaker for Ministry of Trade, so I understand where you're coming from. Excellency, please welcome you to Ghana, Excellency Isifu Muhammadu, and Excellency Wankele. Really good to have you here. With us leading this charge, all Excellency gathered, honorable ministers, members of parliaments, CEOs, distinguished ambassadors, ladies and gentlemen, and the media. I am truly honored to be at this critical dialogue on the nexus between finance, technology, and innovation within the African continental free trade contest. To be also among the titans and decision makers shaping the continent's renaissance Ghana's, Africa's, and the global economy. We must today situate our conversation within the prevailing regional, global, and national economic challenges that we are all facing. Today, it is clear that Africa is at a critical stage in its development trajectory with a population of 1.3 billion and nearly 600 million internet users, a number which has more than doubled since 2015. We must be careful not to make the fundamental mistake of assuming that the knowledge-based digital economy is a thing of the past. In challenging times, when the sands under our feet shift so quickly, businesses and individuals are likely to react in one of two ways: dig into the existing processes and known business lines, or recognize that the very foundations of business, including customer behavior and external economic conditions, are changing, hence the need to pivot in order to prosper. A 2020 survey conducted at the height of the COVID-19 outbreak sampled the views of more than 200 organizations across industries. More than 90% of executives said they expect the fallout from COVID-19 to fundamentally change the way they do business over the next 5 years. More than 3/4 also agreed that the crisis will create significant new opportunities for growth, although this varies significantly by industry. 3 years on, the lesson is quite stark. Neither governments nor businesses can operate as they have in the past. As a McKinsey report noted, what made a company successful historically may no longer be possible during or after these crises. The assumption that supported years of stable, predictable growth may no longer be valid. So I listened to my friend from Ethiopia Airlines. And yes, we must ensure that we make it a tax-friendly continent. At the same time, he would want us in government to support infrastructure and ensure that you fly easily around the continent. It's a very difficult balance, and I felt the need to at least mention it to represent the difficulties that African finance ministers face. How do you build infrastructure and not tax and still improve intra-African trade? That is our challenge. The digital economy is here, and it is here to stay. COVID-19 only served as a tipping point of technology adoption and in some cases, digital disruption. The numbers support this assertion that IFC and Google estimate that by 2025, the digital economy could contribute 180 billion a year to the African economy, increasing to 712 billion a year by 2050, assuming GDP growth is sustained at 4% a year by 2025. The digital economy would effectively represent 5.9% of African GDP, growing to approximately 8.8% by 2050. Across the African continent, the relentless spread of network sensors, artificial intelligence, and automation is already driving a revolution. The same revolution is happening here at home in Ghana. According to the Ghana Statistical Service 2021 census, 83% of Ghanaians aged 12 and older own a functional ICT device. Additionally, 3 in every 5 persons over the age of 12 use a mobile phone for financial transactions. Under this government, for instance, the ICT sector's contribution to GDP has grown by over 40% compounded between 2017 and 2021. Progress in this digitalization journey include 17.2 million Ghanaians aged 15 and over enrolled on the National Identity Register, with 15.9 million receiving Ghana cards. digitalization of passport office, ports, DVLA office, tax filing process, and the birth of debts registry. The internet penetration rate in Ghana increasing from 26% in 2017 to an estimated 51% last year. The launch of a medical drone service, digital addressing systems, and universal QR code payment systems, mobile money interoperability, and the launch of the Ghana.gov platform, which within a year processed over 5.8 million transactions with a value of some 21 billion Ghana cedis. In essence, we are at an important crossroads, and remains little doubt that our adoption of new technologies will prove fundamental to our economic growth. As we work towards dealing with the head and tailwinds that have rocked us over the last couple of years, it is not just the fiscal and monetary interventions of governments in the macroeconomy that will steer us out of the storm, but the penetration of technology and entrepreneurial innovation by established businesses and young startups, and government's commitment to digitalization and technological innovation as a policy priority. The time has come to invest more in research and development to attract investment and partners to boost homegrown digital solutions. Enablers like mobile money should fill us with a lot of pride, not because it is a product of African innovation, but especially because of the transformative effect it has had on the economic development of the continent, particularly the financial inclusion. Let's take mobile money, for instance. Africa now accounts for 70% of the world's US $1 trillion mobile money value. In Ghana, the Bank of Ghana estimates that there were 20.2 million registered mobile money accounts in Ghana as of October 2022. The total value of transactions between January and October 2022 was estimated at 756 billion Ghana cedis. This, of course, should fill us with pride and its effect that it has for the transformation of the continent. What is particularly important is that this creates the necessary inclusion and democratization that is beyond the politics of it. As has been mentioned, payment systems remain a crucial part of Africa coming together and a key aspect of what the AFCFTA is going to represent. The harsh reality is that, however, as terms like virtual reality, e-commerce, and artificial intelligence continue to buzz around our boardrooms and policy discussions, a failure to rally strong support for the local development of these technologies will continue to keep Africa tied to the apron strings of developed economies. In light of this, infrastructure development are sorely needed, including digital transformation through cloud adoption, expanding internet connectivity, and developing efficient logistics networks. Additionally, we must ensure that we leverage modern technologies to tackle the administrative delays and bottlenecks that often characterize the collection, lodging, and transfer of public revenue. We know that tax mobilization is relatively low across the continent. In Ghana, our tax revenue to GDP of a little under 14% doesn't compare favorably to about 20%, 18% for the rest of sub-Saharan Africa, or the OECD rates of about 32%. If therefore, with Africa's current tax revenues of about 500 billion is increased by a third, we're talking about $750 billion for Africa. That, of course, dwarfs all the World Bank proceeds, IMF proceeds that we are all lining up for. It is therefore important for us to look at technology as a key driver to the success of AFCFTA. We must maintain the resolve to ensure that the immense opportunities that the digital future offers us are realized and made available to all. Attaining such a feat would ensure the resources are sufficiently mobilized and directed toward the various elements of economic progress. The time has come for a continent-wide strategic objective of ensuring that Africa's digital trade and innovation landscape is sufficiently supported to contribute to our growth and eventual structural transformation. Undoubtedly, attainment of such an objective will require continued collaboration between Pan-African institutions, government banks, fintech companies, and technology providers for the implementation of transformative policies that support digital trade, further entrench digitalization, especially in the delivery of public service and mobilization of revenue, and ensure that the requisite capital and technical support are directed toward the most innovative solutions on the continent. Truly, the present and the future will belong to those who are A, ready to take a punt on new technologies that may or may not be proven, and willing to invest in innovative solutions that alter the status quo. As such, we must use important sessions such as these to demonstrate our leadership and resolve toward positioning technology as an agent that delivers lasting change across our society. By 2050, ladies and gentlemen, Africa will have a third of the world's population, with over 650 million youth on our continent. We must be aggressive about this if AFCFTA is to succeed. Ultimately, knowledge, skills, creativity, innovation, and entrepreneurship, underpinned by functioning and robust digital systems, will be the launchpad for our continent's collective advancement and success. Viewed from within that lens, I'm confident that we can leverage opportunities that technology presents to finally realize the objectives of the AFCFTA, the attainment of broader and deeper economic integration that would attract investment, boost trade, provide better jobs, reduce poverty, and increase shared prosperity for all. With that belief, I cannot help but be optimistic of what lies ahead for all of us in this brave new world. With nearly 75% of our population under 35, Africa as a whole is uniquely equipped to lead the digital age. We cannot let this moment pass, or as has been said, it is now or never. Ladies and gentlemen, for us in government, I can assure you that our policy focus will remain leveraging this digital future to create a country where ingenuity is encouraged, where innovation is supported, where public service is digitalized and valued, and where technology is democratized. Accountability for the custodianship of public resources is prioritized through technology, and crucially, prosperity is shared by all. So, from ambition to action, yes is digitalization, the payment systems on an international level across the continent, and on a domestic level, as most of our continent is by the informal sector. Mobile money, as we have seen, have made great inroads, and certainly with companies like MTN here, we should support them. MTN, Ethiopian Airlines, etc., to make sure that the continent comes well together. It is my expectation also, ladies and gentlemen, that we have a capital expenditure in technology percentage of GDP as a key matrix for all finance ministers. For Africa's economic transformation is going to develop on a consistent investment in this field. So truly, for AFCA to succeed, we require such a policy orientation for all Africans. For us, August 17, 2020 marked the final leg of Africa's independence, political independence in the 1960s, and 2020 economic emancipation for us. Let us all band together to support the AFCFTA and ensure that it succeeds. Thank you, ladies and gentlemen.
And thank you to the Honorable Minister of Finance, Ken Ofori-Atta. And now, ladies and gentlemen, please make welcome the Group CEO, Africa Guarantee Fund, Jules Ngankam. And he's speaking on mobilizing financing and investment at scale to drive intra-African trade. Please welcome Jules Ngankam, Group CEO, Africa Guarantee Fund.
Excellency Mr. Issoufou Mahamadou, former President of Niger, His Excellency Wamkele Mene, Secretary General of AFCTA, Honorable Samuel Abu Jimapor, Minister of Trade, honorable guests, ladies and gentlemen, I am honored to participate to the first Africa Prosperity Dialogue that is taking place today here in Accra. If there is a key word that we all have to remember, after this dialogue, is the word trade. It's all about trade. When you look at the history, the way people, the way culture, the way different countries, they were able to come together, is because they wanted to exchange goods and services. So definitely, to be able to connect the African, we need to find a way to develop trade amongst the different countries. And when we look at the trade business in Africa, is dominated by the SMEs. The SMEs, they represent the biggest portion of the trade business. In fact, the SME, they represent 90% of the private sectors, 90%. And they employ 70% of people and contribute to around 30 to 40% of the GDP for the African economy. But this number is quite low in Africa. When we look at the contribution of the SME in the GDP in Europe, the figure tends to be around 50%. And in Asia, SME, they contribute up to 70% of the GDP of their country. And this number is low in Africa because our SME, they are facing a number of challenges, amongst which we have the quality of infrastructure. As you know, the SME, they need to have access to good infrastructure, to be able to connect with other SMEs in various countries. Access to market is also a big challenge. We have the human capital, so it's mainly the level of training, of our population. The legal and regulatory climate, that also can be a challenge in various countries. And lastly, access to finance. And when you look at all these challenges, the biggest one is access to finance. It's all about finance. The SME financing gap in Africa is estimated to be around $300 billion, based on a study that was conducted by IFC. $300 billion, which is quite huge. And then when you look at the reason of this gap, it's a consequence of a series of gaps. The first one is the information gap. That is a big challenge in Africa. Banks, we always like to say, okay, the banker, they don't want to lend money. But for the banks to take this kind of risk, they need to be able to assess the type of risk that they are taking. And if you look today in Africa, the number of countries that have a well-functioning credit bureau, you have less than 10 countries across the continent that have a well-functioning credit bureau. So access to information is a big challenge for the banks to be able to do a proper risk assessment, to know the type of risk that they are taking. The second gap is the collateral gap. When an SME, they go to see their banker to get a loan, the bank will always ask for securities. And, the majority of the SMEs in the continent, they don't have that capacity to provide the bank with the security that is required. Another gap is the skill gap. Most of our graduates, when they finish university, SMEs is not the first type of company they want to work for. And that's why most of the good talent, they tend to go and work for the big corporation, not for the SMEs. And then create a huge skill gap when it comes to the SME in terms of strategy, in terms of financial management, in terms of cash management. Another gap is the duration gap. This is mainly due to the fact that, banks, they tend not to finance long-term projects. They like short-term. But when you look at the need of the SMEs, they want long-term money to be able to grow. We tend to say that some banks in Africa, they are very liquid. But when, in fact, you look at the structure of their balance sheet, you realize that it's more of a short-term liquidity. But the SME to grow, they need long-term money. And this is where it's very important to support our financial institutions, mainly the banks, to be able to raise long-term capital in the continental market and also in the international market. And lastly, we have the perception gap, which is very huge when it comes to the SMEs. When you are an SME, mainly if you take an SME that is managed by a lady, should be facing three perception gaps. First of all, we'll say, okay, is Africa the riskiest continent? Is an SME the riskiest type of business? Is a woman the riskiest gender when it comes to business? And because of that, they tend to have a lot of challenges to have access to business to be able to run their business. So at the African Guarantee Fund, our goal is to find a way, is to work together with financial institutions to tackle all the gaps that I mentioned earlier, to be able to unlock finance to the SME at an affordable cost. And when it comes to finance, there are three key elements: the availability of finance, the affordability, and the accessibility. Affordability is a big challenge in Africa. When you look even at the case of Ghana today, the borrowing rate for the SME tends to be way beyond 30%. That is huge. So our ambition through this partnership with AFCTA is to find a way to bring together all the actors in the financial sector and to come up with solutions to tackle various gaps, but more importantly to reduce the overall risk that the banks are facing as they are financing the SME. So we do believe that in the coming years we'll be able to bring our full support to the SME so that they can play their role as the engine of growth of our continent. Thank you very much.
Thank you very much. And now, ladies and gentlemen, we move to our next address by Kate Epse-Kanyi-Tometi Foto, CEO Telka Cocoa, leveraging agriculture and industry to accelerate economic and inclusive growth and to promote intra-African trade. Please welcome Kate Epse-Kanyi-Tometi Foto, CEO of Telka Cocoa.
Your Excellencies, ladies and gentlemen, all other protocols duly respected. I am humbled to be standing in front of you to try to contribute my little quota as we reflect on the prosperity of Africa. The most impressive structures of the world are built on solid foundations that must be sustainable if they have to stand the test of time. African prosperity is projected in the potential it represents. Some other economies are busy right now translating their dreams to ideas, projecting, planning, laying foundation on how to get the best out of the economic powerhouse that Africa represents. As we tend to address the indisputable advantages of the AFCFTA and turning Africa into a manufacturing economy rather than just a primary product and consuming continent, we all agree the time is now to put and build the foundation on which this Africa prosperity would stand. It basically would stand on no other than our own people in the diaspora and the continent, our African continent itself. The key to the $1 trillion economy we all project is in our people. They are the buying power of tomorrow as we look at industrializations. Our numbers represent human capital. Our continent represents the unexploited natural resources eyed by other industrialized nations. To leverage on agriculture and industry to accelerate economic and inclusive growth and to promote intra-African trade, like I said earlier, let's consider we are all here to practically lay the foundation pillars for the project and develop the potential of the masses of our population because they represent the buying power the manufacturing world have already targeted. If there is the willingness of our policymakers and partnership of the private sector to address food or infrastructure, we must put a large-scale strategy, targeted and oriented, and with KPIs that empowers and strives to take the mass of our population from dependency. Only when the majority of our African nation can ensure we have in place strategic plans and measurable targets to produce our own food, develop our infrastructure to preserve, transform, and transfer within our nations and continent what we produce, we cannot effectively talk of sustainable industrializations, let alone prosperity. AFCFTA provides an indisputable platform for our continental trade. Let policymakers look at the comparative advantages different nations represent and the potential of the market within Africa as we ease the movement of people, goods, and services. We have the resources, natural and human. Growing up, there is an adage that caught my attention. Rome was not built in a day. We know where we want to go to take Africa out of dependency. Let us all, policymakers and private sector, commit and take action where we set real objectives and target within a time frame on the way forward. The free movement of persons, goods, and services must be a reality. Infrastructural deficits must be addressed to also deal with post-harvest losses, as we must remember these small and medium-sized producers represent the foundation of sustainable growth and the $1 trillion market Africa represents. An example, a practical example I'd like to give where, as we talk about agriculture, as we talk about post-harvest issues, during COVID, sitting from my country, Cameroon, it struck me when the barriers were closed because of COVID, how much fresh foods like potatoes, lettuce, and so on was being thrown away because it could not move from Cameroon to Nigeria and to neighboring countries like Gabon and so on. Let us assume for one split second that the mass of those who have this comparative advantage in countries where there's arable land can produce, and we cannot and have not put in place the necessary conditions to preserve or to process what we produce, what happens to it. You see that every day as you walk along the markets, the streets in our country. We cannot talk of leveraging agricultural aspects without thinking on how we preserve, how we transport all of that. One other thing that hits us is we cannot, and I think it's a shame, basic things like tomatoes, onions, lettuce is still being imported from industrialized countries. With all the manpower we have, young people who have left school, who don't have work to do, and all the land that we have, yet we can afford to import and use the most, the required foreign currency to pay for this from industrialized countries. If we're talking about African prosperity, we should think how we concretely put in place that what we produce, we can move it from one African nation to another where it is needed, and to preserve that buying power in Africa. As we talk about industrialization, we cannot overemphasize the importance of energy in any economy. We have all seen in recent times the energy crisis that the world is experiencing due to the crisis in Ukraine. It calls for deep reflection on the potentials of Africa, developing and expanding its own energy potentials. Africa cannot grow to industrializations if we don't look at the big picture and put in place the small steps that will make or consider every farmer or SME as a potential market for our industrializations. Until we have strategic and progressive target-oriented action plan that we effectively follow, we will continue to do the talking and not the doing. As we're listening to earlier speakers, it was said 80% of our population is the small, ordinary, medium-sized people. If we don't have or don't effectively ensure that the policies that we put in place cut across is to improve on the buying power, on the stability of what the small and medium-sized population does, we will not move forward. We call on policymakers to strategize on regional basis and the capacity and comparative advantages that different nations represent, and to invest also on the much needed energy that we need, because without energy, a lot of the things we will be talking about here would leave a lot to be desired. Dialogue and practical integration at all, not just in conferences, is something we must ensure we do. The specialists in financial aspects provide and draw attention to the solutions we need as we look at the world that is moving digitally and also with technology, because those are aspects that makes the world move faster, and we cannot afford to be left behind in Africa. We also, as we strive to talk about African prosperity, we cannot turn a blind eye to corruption at all levels. We need to address corruption at all levels, because the programs that we put in place to ensure that we move our continent forward, if we don't look at those aspects of corruption and governance, the projects will not be sustainable and we will not move our continent to anywhere, we will still stay dependent on the industrialized nations. Addressing small equipments that the basic, ordinary farmers or small and medium-sized enterprises require is also something that will boost us at the level of the industrialization that we look at. Because if we strive to produce those small equipments locally, when I say locally, I mean in the continent, we would be preserving a lot of energy, we'll be preserving a lot of financing, we will be moving our continent forward. I will keep on going back to the fact that the industrialized world, they sat back, some have sat back, and looked at us in Africa as a market. It's painful to think that as you look at the crisis in Ukraine, one small nation looked at all of us in Africa and the rest of the world and decided they would produce the grain, the wheat that we need. And we sit back and talk every day of the crisis that Ukraine and Russia has brought to us. Does that mean our land, all of Africa, cannot produce wheat? One step at a time. We should start from small, experimental, small size, because that is what bulk of our populations represent. Empower them to produce. I also say the COVID and Ukraine crisis opened my eyes to a lot of things. I never knew that we could make bread or cakes out of plantain flour, out of potatoes. I never knew that until COVID came, until the crisis came. I was amazed, and today we see lots of smallholders producing that. How about us putting little policies where we empower the ordinary people to produce more of it so it becomes cheaper and affordable, so they don't have to compete with the cheaper prices that comes from the large-scale advantages of the industrialized world. They started from somewhere. Let us in Africa also not be afraid to start from somewhere. Rome was not built in a day, one day at a time. If we have a sense of direction of where we want to go to, if we want to be remembered that we laid the foundation stone, then we must put actions that we can come back in 5 years, in 10 years, in 15 years and measure. I would also still say what is done and done well in the beginning stands the test of time. The first time I visited Ghana, some 30-something years ago, and I took the motorway Tema, and I saw the road, how solid it was. And I looked all around. That was when Ghana was pretty run down. And I must say, thumbs up, you've moved very far today. And I asked, how come this road is so good, no potholes? And I was told that road was built in the time of Kwame Nkrumah. So if we today take steps to say whatever we do, we might not build all the roads in 1 year, in 5 years, in 10 years. But if we say we're going to build every year a good road, if it's some tens of kilometers, if we say every year we're going to empower the ordinary people with the comparative advantage that we know the various regions have, we are going to be able to move places. We are going to be able to be talking concretely about African prosperity and how we move forward. Ladies and gentlemen, every day as I look at the little experience I've had, at times it's quite difficult getting to convince even the people, our own people, you want to move forward. We're quite active in sustainable growth in my organizations. At times, we've had to pay farmers to come to be able to be taught good agricultural practices in the beginning. When I say pay, it's like make it affordable for them to be able to come. But by the time the first sets took on the programs and their neighbors could see the progress, we didn't have to do any more of that. Farmers strive to come to our programs because they could see the difference in their production. Ladies and gentlemen, let us not hesitate. It doesn't matter how small what we do today. Let us do it and do it concretely. Let us stop talking. Let us start doing what it takes to move us forward. Thank you very much.
Thank you very much, Kate Epse Kanyitometi Focho, CEO Telka Cocoa. And now, ladies and gentlemen, please make welcome for the MTN
You're
Group.
watching CTTV, and we're bringing you live feed from the Africa Prosperity Network, Prosperity Dialogues here in the Eastern region at Pedrase, under the auspices of the Presidency of the Republic of Ghana and the AFTA Secretariat, proudly pioneered by the Africa Prosperity Network. Just gone by was the Kate Focho, the CEO of Telka Cocoa, speaking on leveraging agriculture and industry to accelerate economic and inclusive growth and to promote intra-Africa trade. Earlier we had the Finance Minister, Ken Ofori-Atta, speaking on financing intra-African trade, and we also had Jules Ngampkam, the Group CEO of Africa Guarantee Fund, also speaking on mobilizing financing and investment at scale to drive intra-African trade. Now we have our next speaker who's mounted the stage and is addressing the crowd.
Towards 2063. I'd like to start off my remarks by commenting on the period that we are today. We are at a very profound place in history where the African continent has been battered economically and socially by the aftershocks of the pandemic. We as a continent are still feeling the aftershocks of the pandemic more than any continent. We have also borne the brunt of the war in Ukraine in terms of how food prices have skyrocketed, how energy prices have also escalated. And the third force that we're having to deal with is very elevated inflation that looks to be with us for a period of time. There is no other continent that is experiencing the enormous challenges that come with those three crises happening simultaneously at the same time. So we are in a crisis as a continent, but there's an enormous opportunity for us as we think about this framing from ambition to action and how we move forward. I have enormous sympathy for the work that the ministers of finance across our markets have to do to stabilize the fiscal resources that can take Africa forward, whilst the rest of the globe may move forward more easily from these very crises. It is very important, I would position, that we understand that this continent has been set back by the last three shocks that we've experienced, but it is a crisis that we mustn't waste, and the African Continental Free Trade Area and the promise that it has in terms of the tools and protocols that the Secretary General spoke about, this is our moment to move forward and progress as a continent. The MTN Group serves over 280 million subscribers who are every day connecting to the MTN network. 70 million of them also use the network for their financial services in the form of mobile money. So we at MTN are seeing very clearly and every day how customers are connecting to loved ones every day, whether they're using voice or data services, how businesses, small and large, are using technology to be more efficient and to improve the economic prospects of those businesses. And we're also seeing how governments are transforming themselves into much more efficient processes, adopting e-government policies to enable the distribution and servicing of the citizens through technology and technology platforms. When we think about broadband, broadband is the technology that will really accelerate the growth of the world in the next couple of years. We certainly believe that there is prospects for Africa to accelerate broadband. The data from the World Bank suggests that for every 10 percentage points of people who are now accessing the internet, there is a corresponding 1 to 2 percentage points of GDP growth that comes with that. So it is almost a no-brainer for Africa as a continent to embrace technology, to build the digital infrastructure that will accelerate the growth out of the challenges that we face right now today. Africa needs $100 billion to be able to connect everybody, to provide universal broadband for all Africans is going to require $100 billion of investment. As MTN, we deploy about $2 billion of capital expenditure every year to sustain our networks. So if we were to do it just by ourselves, it will take us over 50 years, and we really don't have that amount of time. But as a continent, we are seeing about $6 billion annually of capital expenditure implemented to sustain networks. That is not enough, and it will take us too long. And so there has to be forms and modalities to accelerate the investment in the digital infrastructure this continent so badly needs to accelerate itself and actually catch up, if not go even further than developed nations. If you think about broadband as access to 4G technologies, only 20 to 40% of Africans have access to 4G technologies. The whole of Europe and the US, they have probably over 98% of 4G coverage across all their markets. So they are very well arranged. And as Minister of Finance Ken mentioned earlier on, we must not as a continent be content with being at the coattails of developed markets. We've got to figure out how do we move forward and build the telecommunications and the digital infrastructure that enables Africa to progress and grow. I'd like to put forward a couple of recommendations that we would, as MTN, see as vital for Africa to accelerate its digital and financial inclusion through the adoption of digital infrastructure, digital services, and frameworks. I think the first point is that we need a modernization and renewal of our regulatory frameworks across Africa. The regulatory frameworks for telecommunications are outdated today. They are still positioned for the era of voice, and the era of voice which was dominant up until the end of the 2000s. We are now in a data era, and we're in an era where there is a combination of fixed and wireless to deliver these broadband services. The regulatory frameworks in pretty much all the African markets are still framed from believing that there are two sets of networks, fixed networks and wireless networks. And as we're moving to 4G and 5G, the networks are but one. 5G requires a lot of fiberization in the networks, not just base stations. So there's an enormous amount of capital that needs to be placed in building fiber networks across countries and also across regions. And as MTN, we are busy building an east to west fiber network, starting out in Kenya and looking to get all the way up to Cameroon, and in that way improve the latency and the experience that customers and users of our networks will have as they use 4G and 5G. So the harmonization and modernizations needs to realize, firstly, that fixed and wireless networks are converging and actually will be one. The regulations need to be, understand that actually there is an interoperability between subsea cable, terrestrial networks, and what is happening at a very fast pace in developed markets now, which is satellites, the so-called non-terrestrial networks. There are constellations of satellites being built today that are falling over our region. Africa is in region 1 of satellite in terms of how the 3 regions are arranged in terms of satellites. And as African countries, private sector, the government and regulators need to align on how we see the regulatory arrangements between terrestrial and non-terrestrial. And if we're not clear and with our own foresight in terms of our own ambitions for Africa, we may find that the constellations that are going to be above region 1, above Africa, are ones where Africa does not have any control for the benefit that it wants. So the first thing is really around modernizing and harmonizing the regulatory frameworks. The second point, which is quite related to the first point, is that there needs to be a fair share contribution from all the participants, particularly in the private sector, in how this infrastructure is developed and used. Mobile network operators, pay regulatory fees, they pay taxes to support the fiscus, but there are a whole range of so-called OTT players, over-the-top players, that basically are over the top of this infrastructure and pay no economic contribution to the countries that they're extracting the value out of. Now, without being too pointed to the likes of the streaming services, they really are only in existence because they can operate over the top of networks, but they pay very little economic contribution to either the government of Ghana or to the governments across the 54 member states. So the fair share contribution of international service businesses, the so-called OTTs, the Googles of this world, the Facebooks of this world, would bring quite a material resource to accelerate the digital infrastructure. The third area we would position is that we need to turn Africa into the skills hub for many of the digital skills required for the services that sit on top of the infrastructure. Right now, you're all hearing about generative AI, artificial intelligence. Some of you here may already be using ChatGPT-3. We understand that technology can even pass an exam. And Secretary General Wamkele, maybe it can write one of our protocols if we so ask it to. But these technologies are being delivered in the developed world. Cast your way forward to 2050, the majority of the skilled workforce will come out of Africa. So we need to look ahead and say, where do we need centers of excellence, our own Silicon Valleys? And we need to have them here in Accra. We need to have them in Cameroon. We need to have them in Rwanda. We need to have them across the African continent, where we have our own software engineers who are developing these applications on top of the digital infrastructure to serve our people, both in urban and rural areas. Africans understand their own needs for their own people, including in the rural areas, and we're best placed to develop those services. We need software engineers, we need data scientists, and we need to develop them here. We don't need our African brothers and sisters to see that they can best develop themselves by going to Silicon Valley. We have to create our own Savannah valleys and other forms of valleys that attract these skills. And with a huge focus on the youth, because the future is all about the youth. And if we can create a concerted effort between the private sector, government, as well as the Ministry of Education, the Ministries of Education, so we have a very concerted effort that we are developing our own digital expertise and capacity here on this continent. It is a most crucial policy that we believe as MTN is required, and we're very supportive of that. The other area that we would point out is needed to drive Africa forward is ensuring that we have stability agreements and the ability to have investment protection. As I mentioned earlier on, the ability to build fiber across markets that you might not even operate in, it's a long-term investment decision where the returns will only come through in 8 to 10 years' time. And for private capital, which is being used predominantly to develop digital infrastructure, those protection rights will become very important. And the more secure those protection rights are, the more capital will come. And what we know as MTN is that there's a desire both on the African continent and outside of the African continent to invest in Africa, because Africa is actually the last frontier of growth. Digital infrastructure, yes, is growing in developed markets, but the fastest growth of digital infrastructure sits within the context of this continent, and we need to take that privileged position and ensure that it works for us as Africans. I want to close off by talking a bit about how MTN sees its role within the broader African society. We serve 1 in 3 Africans with telecommunication services, whether it is digital connectivity or financial inclusion. We believe that there is a very important dialogue that is needed to move us from ambition to action that brings higher trust levels between the private sector, the public sector, and civil society. There is a deficit of trust that we need to, and in the private sector, we need to play to as well, to cure what may have been prior perceptions about how multinationals work across the continent. And there have been cases, let's be honest, of multinationals denuding countries of the resources that were due in the country, whether it's by taxes and other forms, royalties, etc. But we can't let that trust deficit linger any longer. It needs curing right now today, because the issues that we face are so profound, so challenging, that if we do not have a multi-sectoral approach to Africa's recovery, the ambition to action is going to be extraordinarily challenging. We as private sectors and multinationals who call Africa our home, we have nowhere else to go, are truly committed to being participants in that dialogue and those programs of ambitions to actions. Because when Africa prospers, we as MTN and companies like Ethiopian Airlines and others that were on this platform, we will also prosper. Our prosperity, our success is connected to this continent, and we believe firmly and will remain committed to participating in all the processes that take this continent forward. And we must put trust at the center. We must put digital infrastructure and capability at the center to ensure that Africa ultimately succeeds and every African can hold their head up high with dignity and pride so that we are not left behind. Thank you very much.
So there you had Mr. Ralph Tende Mupita, the MTN Group CEO and President, reiterating the commitment of his company to ensuring that Africa progresses, Africa sees the light of day. You're still watching the Africa Prosperity Dialogues here on City TV. We're bringing you the live coverage of the final part of the event. Now, next on the bill, we'll be going to put in business at the hearts of the implementation of the AFTA, addressing blockages and incentivizing actions. We are expecting to have lead business contributors, that is Ronnie Ntuli, the chairman for Teolo DBY, Sir David Ajayi, founder and principal, Ajayi Associates, all addressing infrastructure, food and energy deficits. We will also be expecting to hear Dr. Humphrey Eyim Daka, the president of the Ghana Association of Industries, AGI, speaking on facilitating free movement of people across borders. And finally, we will hear Dr. Catherine Chinedum Aniagulu Okoye, the regional director for West Africa Ford Foundation, also speaking on guaranteeing security to deepen intra-Africa trade. And finally, after all of this, we will hear Mr. Wamkele Mene, the Secretary General of the African Continental Free Trade Area, sharing some reflections. We are going for a short break now. After that, we will come back in studio into the auditorium and have the president join us here at the Africa Prosperity Dialogue. So it's been a very fruitful and progressive event so far, with the theme AfTA, From Ambition to Action, Delivering Prosperity Through Continental Trade, here at the Peduase Lodge. And we have been reliably informed that the President, Nana Addo Dankwa Akufo-Addo, has arrived on the premises and should be entering the auditorium any moment from now to partake in today's dialogue and conversation focused on promoting Africa's prosperity. And now, so far, we've gotten a welcome address from Honorable Samuel Abdul Jinapor, who is the Minister for Trade and Industry. His Excellency Wamkele Mene, the Secretary General of AfTA, has given his introductory remarks. We also had a statement from His Excellency Sofu Mahamadou, the former President of Niger and the AfTA champion. Right after that, we took addresses from a number of key speakers. First on the bill was Mesfin Tassel, the Group CEO of Ethiopian Airlines, addressing the challenges of moving goods and people across Africa. And those were part of, and that was the topic he spoke on. He shared the need for us as a continent to have an efficient and affordable means of transport in order to ensure that the AfCFTA thrives. And these are part of the topics that we have been sharing and that have been going on at the Africa Prosperity Dialogues. We're going for a quick break. After that, we'll come back live to the premises here at Peduase Lodge and continue with the event. My name is Michael Obodu. This is City TV. Stay with us.
City TV is live on DSTV. Go to channel 363. On GoTV, access City TV on channel 182. On a digital TV, please press the menu button on the remote control and run a new search on your TV. Take note that without an antenna, you cannot access City TV on your television. City TV can be accessed on a free-to-air digital box like the GoTV and StarTimes box. City TV, it's your world.
Hello and welcome to the Effective Living Series 2020.